Marty go?
Hey guys, Sean Zinn, the Connection Machine, aka the Insurance Doctor. This is live number 20 on the year. We're all about providing value, giving you an education. Hopefully, you take some and implement some of the things we're talking about with my guests. This is the first time. This is probably what the issue was. We're a little bit late. StreamYard went overboard. Their server. I guess people are finding out what we're doing and using StreamYard. But I have Marty Bromson and I have Matthew Victoria, the M&M team. Let me bring them on. Hey guys, what's going on? A little clapping up from my guys
All
here.
right.
Nice little TV show we have. So
hey guys,
I want to thanks so much for
M&M
joining,
show.
guys. But thanks for the patience. We were trying different things and we made it happen. That's what it's all about. So who wants to go first? A little introduction, and so people that are in my community know who you are about, and this is how we're gonna help grow business together for everyone out there.
Can go ahead. Marty Bronfman, part of the M&M Mortgage team, powered by American Financial Network. We are opening up a branch in Springfield, New Jersey. Been in the business for quite some time, pushing about 20 years now. And I've been in all facets of the mortgage industry. So I have a wealth of knowledge on how the industry works, both in the origination side and on the secondary and wholesale sides. I can bring some insight to people and give them some knowledge as to some things that are happening in current events.
Awesome. And Matthew?
The other half of the M&M team, obviously Marty and Matt. I've been doing this for a little over 8 years now, originating creative mortgages. Marty and I go back a little bit, and we thought it was a great idea for us to partner up, since we both offer different things, but we work very well together. So,
no, that's awesome. We were talking before we got this all together, how important it is to give that education, and we have a bunch of people jumping on right now. So before we get into it, please, guys, don't forget, hit that share button, hit the wow button. Let's educate as many people as possible. We have some echo. If one of you has, that's you. Yes. If you have any, definitely mute it. But if you guys are loving what you're seeing and hearing, please hit that love button. Drop a comment. Where are you watching us from? What part of your house? We know we're all stuck at home. Drop in a comment where you're from, what kind of business you're involved in. And if you have a website, cell phone, let's try to help each other during this 15, 20-minute live that we're putting on for you. So we're going to provide some value. Sit back and relax. There's a lot of great stuff that's going to come in and being thrown at you. So if you guys have questions, hashtag live if you're watching now, hashtag replay on the replay, and let's get this thing rolling. Now, we have a big thing that came and hit the news, this forbearance or forgiveness stuff. Matthew, what is the deal with this?
It's definitely got a lot of people confused, and that was one of the reasons why Marty and I wanted to come on and try to explain it to people. Obviously, we're going through some tough times right now with what is going on. Forbearance basically means that they will allow you to go for 3 months without paying your mortgage. But what happens is, in the 4th month, you get to pay all 4 months. So a lot of people think that, hey, I don't have to pay my mortgage. Well, yes and no. So in that 4th month, you're going to have to pay all 4 months. Otherwise, they very well could start foreclosure proceedings on you, because now you haven't paid your mortgage. So what I would do is I would call your servicer, because the servicer is not necessarily the lender. And Marty will actually explain that in a minute, and ask them what you could do, if you could get a deferment or what you could do. But my suggestion is to try to pay that mortgage for as long as you can, and not take the forbearance, because it's not going to end well for you come July.
100%. And Marty, do you want to add on as far as these changes, why these things are happening? Why are banks doing this?
So there's a lot of things happening to lending and secondary markets right now. Mainly, the biggest issue in rolling into what Matt said is payment defaults. So a lot of these lenders are really scared that if a certain large percentage of their pipeline goes into default, then they are really on the hook for a lot. Now, what happens is the government loans are where the issue mainly lies. Of course, there's conventional loans that are having issues as well. But the government loans, the servicers are on the hook to pay the lenders or the investors on those loans. If they're servicing those loans, they're providing a service for a fee. So they're taking care of the loan payments, they're answering questions, they're sending out tax payments, insurance payments to make sure that's covered. So they're providing a certain fee to those investors that give them the servicing rights to the loan. And what happens is, when those payments become defaulted and those government loans, FHA and VA, go into default, those servicers are still required to pay the investors those payments. So if 25, 30, 50% of their portfolio goes into default, just imagine how much money they're losing consistently on a month-to-month basis if all those people stop paying their mortgage. Now, FHA has insurance, which is why we pay an extra premium on our payments. But that insurance doesn't go into effect until those loans are considered in major default. Now, with these new laws that came out, there's no such thing as a major default. That's all being blocked. So all these lenders are required to do forbearance agreements, so they can't issue major defaults. They cannot collect their FHA insurance policies. So there's a real big twisted mess happening right now. Nobody really understands how to get out of it. Some lenders are stopping lending altogether. Some lenders are saying, you know what, we're going to take the risk, we're going to lend, but we're going to lend to the borrowers that we think are going to pay us back. So they're requiring reserves. They're raising their FICO score requirements. They're changing their ratio requirements. A lot of overlays are being put into place. This is affecting the entire industry. There's some advantages to being in certain places, whether you're a broker or you're working for a seller servicer, or you're working for a mid-sized bank. There's some benefits and there's some downsides on working for each of those type of environments. But this is affecting the industry as a whole.
No, this is why we wanted to go live today. We have a bunch of you jumping on. We have Kenny Urbina, Michael Montalvo, Anna Colo, Mark Marcy, Sandra Perez, Fred Posimo, Rob Hennessy, Michael Larson, Doug Layden, Megan, Lisa. Guys, drop a hello in the comments. Drop a website. Any questions you guys have, this is a time to take advantage of, this value that we're bringing you today. I also heard too, and then other people talking in lives, that people's taxes are not going to be paid and their homeowners insurance, because escrow accounts, there won't be any money there because of this, deferment, forgiveness, forbearance, what have you. If you have the money, I'm thinking you got to pay your mortgage.
I suggest that people pay. If you are earning income and you have the means, you should definitely pay your mortgage. Now, there's no guidance from the federal government or any regulators as to what will happen after this forbearance period ends. Are the servicers now going to report to your creditors, letting them know that you missed 3 payments in a row, or letting them know that you're not current on your mortgage payment, which has an enormously negative effect on your credit scores? Nobody knows. So if you do have the means, please continue to pay your mortgage.
We have a question, guys. I don't know who wants to share it. Michael Larson, is the full 3 months you defer due all at once after the 90 days?
Yes, you are going to be responsible to make that 3 payments plus the 1. So come July, you're going to be responsible for 4 payments. Now, we don't know what's going to happen yet in July when people default on that. But that's why Marty was saying, if you can pay your payment, if you are still gainfully employed, where a lot of people now are working from home, so they still have their jobs, those people should be paying their mortgage. Like I had a closing that was supposed to happen. The guy works in the mall. Malls are closed. So he can't make his mortgage payment. He couldn't close on his house because now what they're also requiring us to do is they're now requiring us to verify employment to make sure that they're not on furlough as well. If that answer is yes, they're on furlough, you can't close now either.
And we're required to verify employment up until 1 day before funding the loan. So they need to have a job for us to do the loan.
Yeah.
So I hope that answers your question, Michael. I believe it did. Again, if you have some, you need to go down that path, it's something that you might want to check first before speak to one of these guys first, or any of your mortgage providers, so that you are going to be educated properly. Because if you have the money, it's better off sticking to it, keep paying it. I paid mine, you got to pay yours. Now, Matt, you want to explain any of the tricky guidelines that are out there because of this change?
Well, yeah, if anybody's familiar with the term non-QM means non-qualified mortgage. Those are all those mortgages that after 2008, they said they don't fit into Fannie, Freddie, or Ginnie Mae, which buys FHA and VA loans. So all of those loans for right now, they have stopped doing any funding on those loans, right? So that's ITIN loans, which is tax ID number, bank statement loans for people that are self-employed, things like that. That's one of the major changes that we had. A lot of the hard money lenders aren't funding loans right now either. So the LLC loans for when they're doing the going from a fix and flip loan into a 30-year fixed, they have those on hold right now too. FHA, I heard that Wells Fargo is not funding VA loans right now. I just saw this. So that's another issue that people have to worry about. Like if you are a pre-approved buyer, or if you are a realtor that has a pre-approved buyer, I would definitely reach back out to the lender and say, hey, can you guys do this right now? They may say yes, but now it's going to require two discount points in order to be able to do it. We were pricing out loans, and right now they're pricing for us at 0. What does that mean? That means that we don't make a dime on the loan. We would have to do it for free, which we're great guys, but unfortunately we still have to pay our employees and our people, so we can't do that. So now that loan that you thought you had, well, now you're may not be able to do it, because now they're looking up to maybe even 6 months of reserves now. It's affected a lot of different things: self-employed borrowers, FHA loans, conventional investors, things like that. Those straight across the board. And the mortgagee letter from FHA or HUD came out on Friday night. That's how quickly this came around.
And they're effective immediately.
Yep.
So it's any loans in process, not any new case numbers or any new files. It's every single loan that hasn't closed. Yeah. So yeah, guidelines are changing quickly and every day, it seems like recently.
And
no, can you still get loans? Yeah, you can, but now you just have to make sure that that loan is able to be done. Right. At least for right now. Right now, the FHA letter is in place right now until April 17th. Mm-hmm. So they are not saying this is a new normal. What they're saying is that we're restricting for right now. It's going to change. We're going to revisit it. We just got an email out from the CEO today. They're actually increasing their warehouse lines because they're expecting loans in about 60 days to have a boom.
I have another question for you guys, not to cut you off, Matt and Marty. Guys, continue with these questions. Hit that share button, hit that love button, that wow button. And again, if you're afraid of asking questions, just drop a comment, say hello. We'll put you on the screen. Let's get you a little, screen time. From Kenny Urbina, what do you think the next big change or changes mortgages are facing in the next weeks, months, years, and how will it affect the buyer and the sellers?
Want to take that, Marty?
Yeah, I mean, we don't necessarily know the final verdict or the final outcome of what's going to happen. But, I've been through something similar to this back in 2008 when the market crashed and things changed quickly. And it was a similar situation, but that was self-induced. That was an economic and monetary problem. This is not. This is a health issue. This is a pandemic and a crisis. And this is not something that was self-induced. So this, in my opinion, this is not going to last very long. Things will change and things will normalize for the better very quickly. I don't necessarily know if some of these changes may be permanent or some of these changes may loosen up even more than they were before. Because I do believe the federal government is giving us stimulus and helping certain industries. And from what I've been reading in the mortgage publications, Ginnie Mae is going to be getting some of that, and they're going to be helping out the servicers. So, things will normalize and things will change. We're such a huge part of the economy, and I know the federal government will do what they can, and the Federal Reserve will do what they can to prop up the real estate industry.
Well, let's remember an important aspect here. Our president made his money on real estate. So I really don't think he's going to let that one, he's not going to let that one happen. And it's really one of the cornerstones of our economy.
Mm-hmm.
We have another question from Sandra Perez. What kind of consequences these changes will bring to our market?
Well, I think what's going to happen is, so I saw a post. I belong to a lot of different groups, and I speak to originators across the country. They said that Caliber Home Loans yesterday received 8,000 phone calls for forbearances. Now, there's a lot of those people that don't need the forbearance, and they're just looking at this as free money. So what's going to happen is, come 4 months, which is July, you're probably going to wind up seeing a shift in the industry, in the market, where you're going to wind up seeing some possibly short sales or foreclosures. A lot of people are waiting to buy because they think the market's going to tank. That's not going to happen. Let's face it. People are still going to be able, they can still buy right now. It's tougher, and come 60, 90 days, when all these people that are quarantined come out, what's going to happen? We already have a tight market.
Build up demand.
So it's actually going to wind up pushing prices up. Will you wind up seeing some short sales? Most likely. I mean, for people that are doing the forbearances, but that's because they're not properly educated on what a forbearance really is and what it entails. They think it's just a deferment. A deferment is different. If they will actually tell you, hey, listen, I'm going to put on the back end of your mortgage, that's different. And if they'll do that, that's awesome. People are taking a forbearance, which just means that it's a jumbo balloon payment in 4 months.
Right.
So you got to be careful with that. Now, let's move away, and this is why we're providing value for everyone that's watching. We have a bunch of people. I have, Mike DeCuna jumped up, Brian Ackerman, Michael Larson, Andrew Bufumo, Lewis, Bob Diorio. We have Eileen Colon, my brother-in-law, Bob Ventimiglia, Furley. What's going on? Guys, drop a comment, drop a, couple of those wows and hearts, and hit that share button. How else are you guys helping those real estate agents out there with their business? And this is, a lot of them are home. A lot of them should be developing themselves, their brand, how to generate leads. How are you going and giving some, assistance with that for those real estate agents out there needing that right now?
Well, go, sure. So, I mean, really what's most important right now, we're all challenged. Real estate agents are having a difficult time marketing their properties, getting people there, even doing their job in general. So like Sean said, it's important to do some self-development, but also to educate yourself. Educate yourself on the industry, educate yourself on what's happening, so you can provide value to your clients and let them understand, exactly what's going on in the mortgage industry and the real estate industry. Both apply to you. So that's, the really important part right now, and understand how technology can help you. Real estate agents really should take advantage of technological changes and technology in their industry, because that's where they're going to differentiate themselves in this type of environment. Because to be honest with you, I don't think anything's going to be back to the way it was. People are going to distance themselves. People are not going to want strangers in their house. Some people are not going to want those types of things. So for you to differentiate yourself and understand what technology you could use to accomplish those marketing goals, that's what I think you guys should be doing at the moment.
It's for those realtors that don't do video, now's the time that they're going to wind up starting. That's what it really is, we can run ads for realtors for their open houses. It's not hard to do. They should be doing virtual tours of their house to begin with. This way they can use that video on Facebook or any other marketing. We're teaching them how to use their database, because that's one of the biggest things. Like when we talk to a realtor, where's your database? Well, I've got a bunch of contracts around the place. Well, you've got two types of people. You have one type that looks at this as a vacation, and you have the other type that says, hey, you know what? I got time at home. Let me get in front of my computer. Let me organize my database. Let me buckle down start reading and touching back to the people that I haven't talked to. Those are the types of people that are going to wind up thriving, because when there comes a crisis, there also comes an opportunity. So it's a matter of trying to get those people to where they need to be.
It's important to continue to personally develop, read, learn, use the YouTube channel, start with the video, get in front. That's why, just so you guys know, StreamYard, we couldn't go live at 3 o'clock when we wanted to, because everyone's starting to get on the bandwagon, because this is the way to communicate. This is how you get the word out. This is how you add value first before you ask for business. Don't just ask for business. Can I pre-approve you? Can I list your home for you? Nobody wants to hear that. But provide some value, and they're going to go to you whenever they're ready because of the service that you provide. We've been just dropping major value. We appreciate everyone watching us. Again, hashtag live if you're on now. Hashtag replay on the replay. Don't forget, any questions you drop, we'll check it out later and we'll definitely reply. Marty, and I dropped Marty's and Matthew's Facebook pages. Please reach out to them. Is there any final thoughts, guys, you want to share with everyone?
Well, I'll give you an example. I had a real estate investor. She's a flipper, and she's not new in the business. She's been doing this probably about 10 flips already. And she called me on the weekend, and she's actually had a file that was 5 weeks in the making. So I wound up actually looking through everything and told her that, hey, your buyer can't buy. So that was a problem and an issue.
I think it's really important right now to work with some people that are educated in some of the changes that are happening, making sure your buyers are fully pre-approved currently, not a week ago, not 2 weeks ago, but right now. So make sure, go through your pre-approvals, talk to your clients, have them call their loan officers, have them call us, and we can help you guys out there. Let's take care of our healthcare workers. Let's take care of other people. Stay home, stay safe, stay healthy. We can all get through this together, and this is absolutely a temporary situation.
Yep. Guys, I appreciate you spending some time with us. I appreciate the persistence of making this happen. We tried to do a Zoom call, a Zoom video, where we were on a StreamYard. Now we finally made it happen. So I appreciate you sticking it through. It is how important it is to work with people that are persistent. That's important, I believe. So, guys, I appreciate it. I hope to see you guys soon. And we're going to try to get that virtual happy hour in the near future. And if you guys need anything, reach out to these guys. They're great people, great friends. And till the next one, guys, I hope you guys have an awesome day.
Thanks, guys.
Take care, guys.
Bye.
Bye-bye.
All right, bye.
There you have it, guys. That was the last live for number 20 on the year. Please reach out to them, connect, friend request, and I look forward to speaking with you. If you want to do a live, I'm already booked up until actually the week of, the 13th. I have a Friday open, but then the 20th on. Let's get it going. I want to continue to drop value. Check out connectionmachine.biz. Check out Sean Ziem, web.webcards.biz, and let's collaborate soon, guys. Have an awesome day.